Joining me is Mr. Ranen Banerjee from PwC. Mr. Banerjee, yesterday was when the IMF also released its global economic outlook. They've spoken about how APAC is looking in terms of growth. They've kept India's growth rate quite stable at 6.5% for both 25 and 26. How do you see the tariff loom, especially when it comes to the APAC region, India?
I think the tariff is something which is uncertain still, but I believe that the uncertainty is slowly kind of reducing, and IMF actually has recognized that, and therefore it has upgraded the global economic growth to be higher, and even for India it has upgraded from 6.3 to 6.2 to 6.4%, and I believe that. The uncertainties is a bigger challenge than the tariff rates themselves. And while there have been statements that the tariff rates could be higher for India, but we have to see because the negotiations are still going on. And we believe that as long as we are not worse off than the other APAC countries, then we should be competitive from an exports perspective. So from an external sector, because of the certainty coming in progressively, I believe that it's a positive for the economy.
Is there going to be a much impact when it comes to our export basket? An economist I was speaking to was telling me that if you keep pharma aside in our trade deals with the US, it's slightly a minor impact that comes on just gems and jewelry, and besides that, not much if you see in absolute sense. So do we have the appetite to take in case we come, there is a 20 to 25% tariff on us like it's being said by the President of United States?
No, obviously 20-25% tariff on India, and it will be differentially higher than some of our competing economies who are exporting to US. So it's going to be a challenge for the industry if that is there. But what we should look at, yes, for certain segments like pharma, which has a very high exposure to US, it will be negative. But for the other segments, we have an opportunity to diversify. So we can look at geographic diversification, because now we have the FTA with UAE, we have the FTA signed with UK, and we will have an FTA very soon with the EU. So possibly obviously there will be some negative impact if such high tariff rates come, but it will not be like absolutely kind of downhill, because we will also have opportunity of other markets where we are getting better treatment or better access. So to some extent it will get absorbed, the impacts will get absorbed from that.
Okay. Let me come to other macroeconomic indicators. We were discussing inflation just a while back. Fed is about to meet in few hours from now, and they're going to analyze their stance on the US economy. In our discussion, you said that while RBI has taken a neutral stance, there is a possibility that it may go for some cut depending on how the sentiment pans out. How much, what is the kind of appetite we have? To what extent can we go in this year?
See, the one thing we need to know is that our growth rate is still, we'll say, below our potential growth rate. So therefore, the economy is not, I would say, overheated. So therefore, if we are cutting rates, then it is not going to overheat the economy, but it may spur the economy. But again, the RBI has said that we are taking a neutral stance now, which means that they may increase or may decrease, but obviously increase is not on the cards, but there could be a decrease which may be coming in. But I believe that RBI will do some bit of wait and watch. We can expect a rate cut during this year, but it won't be in the immediate Monetary Policy Committee meeting.
Okay. In terms of food inflation, where do you see things panning out in the coming quarter?
So food inflation will remain benign, and possibly it may further deflate given the strong monsoons that we have, and the monsoon is panning out as per forecast. So as long as we do not have any adverse severe climatic disruption or even monsoon towards the second half, it doesn't play truant, or the special distribution is not very skewed, we believe that the food inflation should be benign in the second half of this year.
Okay. Now things seem a bit skeptical when it comes to the crude oil prices, and in case we have to move from Russia, do we have the capacity to absorb higher prices when it comes to buying expensive crude, owing to the fact that the global situation can change our source of importing oil?
Yeah, so if the Russian, obviously our exports share, the import share rather, from Russia has grown and grown significantly. It is above 30% now, and if there is restriction on or inability to import from Russia, let me put it that way. See, we have alternate suppliers, right? We are just 3 years back, our share from Russia was very, very small. So given that, I think we can diversify our supply. So from a supply side, it won't be a problem. But yes, since our share has gone up significantly, the Russian imports, it is going to have an impact on India, because we'll have to buy a little bit more expensive crude, and that has an impact on the overall economy, because we know that it has an impact on our current account, it has, and therefore consequently on the exchange rates, and of course it has an impact on the inflation also.
Right. Mr. Banerjee, one quick question, and this is on private investment, which has been one of the key concerns even of the government, that it's not been pulling up, and this could lead to the whole efforts of the CAPEX that government has been pushing from central could also be impacted indirectly by this. Is there a way out of it in the near future?
So I think the government capex needs to continue, because what we are trying to do through the government capex is to bring down the logistics cost in the country. Now, as the logistics cost come down, as the projects get completed, and the government has been spending a lot over the last 3 years, so as these projects get completed, progressively the logistics cost will come down. It will make our goods more competitive. It will bring down the cost of actually the delivered goods. Therefore, from an export perspective as well as domestic market perspective, the production will become more competitive, I would say, from a cost perspective, and that is going to possibly give a headroom to the private players to actually have more capacity utilization. And as the capacity utilization crosses the 85% or so threshold, I think private players will kick in their investment plans.
What is currently holding them back?
So currently the key thing that is holding up is uncertainty. See, uncertainty on the demand, both domestic as well as international. International demand, we know that the economies are weak. The major economies' performance, while they have recovered, but it is still weak. Therefore, the demand on the external front is weak, and the demand in the Indian market, while it is holding up, we see the PMI prints coming very strong, but there is an uncertainty, because we don't know how things will pan out. What will be the impact of the tariffs, exports, domestic consumption, the rural consumption, how it will pan out. The urban consumption was weak in the previous quarter. This quarter it has come back, but there has to be a longer term view on the demand sustainability. Only when the confidence comes on demand is when the private capex will kick in. So it is not dependent on so much on the interest rates, but if we have a certainty on demand, the investment will kick in. And we had seen that when the interest rates were higher in the past, at that time also, when the interest rates were 7%, 8% some years back, the investments were very, very high. So the investment decision is not just on the interest rate, but I think it is primarily more from the capacity utilization and certainty of demand, or at least some confidence in the demand levels. So that's what is holding up.
IMF, in its APAC review early this year, had specifically spoken about what's probably holding back India, and it is certain regulations and the dire need of deregulation in the country. Do you see that as a concern also, if we're talking about private investment not picking up, government's desperate push on CAPEX?
No, of course, see, Government of India has recognized regulation and deregulation as one of the key aspects in his budget speech. The finance minister in her budget speech actually said that we need to work hard on this. And now the deregulation actually, the kind of deregulation that we are talking about, which will have impact on business, is at the state level. So it is the deregulation that has to happen at the state level. While Centre has been doing its business reform action plan, as we know, they give to the states and states kind of implement it. There is a kind of a healthy competition between the states on this front. But clearly that's an area which requires a lot of focus at the state level. And I think if you look at from a Government of India perspective, this is the first possibly where as per the recent reports that what we are negotiating with the EU, that there is a separate chapter being negotiated on actually regulatory certainty. So that clearly shows the intent of the government to send a message out that it is serious on deregulation and regulatory certainty. So I think if these two aspects are kind of really worked upon, and there has to be a partnership between the state governments and the center on this, because states have to deregulate many things, the investments will kick in.
One quick last question. The Q1 numbers have shown, the early 3 months have shown that CAPEX has done better than at least what it was last year. How do you see it performing overall in the year, and do you think this will help the fiscal glide path also?
So I think the CAPEX is better in Q1 this year compared to previous year is primarily because of the first quarter being impacted by elections last year, and therefore there was a lot of backloading of CAPEX that happened, and we missed by about 5 percentage point the overall spend. So given the trend that we are seeing, I'm hopeful that the government will be able to spend the allocated budget, and if it is able to spend the allocated budget, I think it will be a great achievement, and it will give a good impetus to the economy.
4.4% fiscal deficit on track.
4.4% fiscal deficit is absolutely on track. I don't see that as a risk because revenues, while in initial prints are slightly behind estimates, but I think overall during the year it should be picking up. And from a spending perspective also, I don't see any serious areas of overspend or pressure points to spend during this year, given that this is almost the second year of the government.
Hopefully the crude does not get costly for us to be able to make some domestic cuts.
Yeah, Miss, we economy and people live on hope, and we hope that the tailwinds that are there for India from an inflation point of view, from a demand point of view, from the FTAs that are getting signed, from the export potential that we have, of course the services sector growth that we are seeing in the country, especially on the back of the GCC coming to India. I think the tailwinds are much stronger than the headwinds of geopolitical uncertainty and the global tariff uncertainty. So in summary, we hope that it will be a positive year.
Thank you very much, Mr. Banerjee. Thank you.
If you like the video, do like, comment, share and subscribe.